Good morning, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of June the 21st. Hey, happy Father's Day to all you dads. I hope it was a great Sunday, a great weekend for you. I had a fantastic weekend. I had a barbecue with my father and my kids. I spent some time on the lake, tried to stay cool. It was a really nice weekend. Okay, so what happened with the market and what's happening to our market this week? So last week, the last 3 weeks, we've seen a pretty flat market. Well, that did not happen last week. We saw big fluctuations as we predicted, and we predicted rates would get worse by the end of the week, really floating the rate into Wednesday. The Federal Reserve had their big meeting Wednesday, and they didn't disappoint. The Fed came out with some indications that we'll talk about in a sec about inflation and tapering, and that really caused a big sell-off on Wednesday. So we locked our clients on Tuesday, and it was a good thing. Again, a big sell-off on Wednesday, rates went up, and we saved our clients a lot of money. So what are we looking at this week? The elephants in the room: number one, number two, inflation, and number three, recession. So the elephants in the room: taper and inflation, and everybody's talking about it. The Fed came out last week and said, hey, we might want to consider tapering coming up. We've known they were going to do this. They just haven't wanted to say anything publicly. And inflation, they've had this whole mindset over the last few months that inflation, don't worry about it. We're going to continue to buy mortgage-backed securities and it'll be okay. Well, they came out with a little bit different message last week. And the two things were very clear. The Fed acknowledged that inflation could possibly be an issue. And now we're going to start to see this week a lot of the Fed speaking about that, giving their opinions, a lot of Fed members giving their opinions on what they think. And they also talked about tapering. What does that mean? Well, we know that when money flows into the bond market and investors buy mortgage-backed securities, that keeps rates down. Money's flowing into that bond market. When money flows out of the bond market, maybe into the stock market or into savings, that's less trading in the bond market where mortgage-backed securities are traded, and mortgage rates go up. So if the Fed tapers, meaning they buy less mortgage-backed securities, which they've been doing by the billions of dollars since the recession started last March, if they start to buy a significant amount or slowly taper in that purchasing those mortgage-backed securities, that's money flowing out that could push those rates up. The markets, the free market, your 401ks, your private investors, your foreign investors, they're going to have to continue to put money and have faith in our bond market to keep those mortgage rates down. Really, we should be at a much higher interest rate on mortgage rates because of what's happening in the economy, but the Fed is artificially keeping those rates down by buying those mortgage-backed securities. So now they're talking about taper maybe the end of this year, first part of next year, and the bond market reacted and had a sell-off, and that might continue. Second thing is inflation. As I said, the Fed now is acknowledging that inflation might be an issue. It's way up. Last week we had record numbers that came out last week, and inflation is bad for mortgage rates. Why? Well, let's say that you have $1 million in bonds and you're getting a 4% rate of return. $1 million in bonds, you're getting a stable, secure 4% rate of return, and inflation is 1%. Your real rate of return is 3%. Well, now, if you have that $1 million of 4% bonds and inflation is now 3%, you're only really getting a 1% rate of return. So what will happen? Those yields on bonds will go up. Maybe they'll go up to 7%, and inflation's at 3%, so you're still getting your 4%, or they'll go up to 6%. See how that works? So that's why when we see inflation rise, we see rates rise, which are yields on bonds. So we're going to be watching this, really what's going to be happening with inflation. And we've been talking about this for months, that inflation would really increase into the summer, and it's not disappointing. We're seeing that. The Fed's continuing to buy those mortgage-backed securities to keep those rates down. Friday, we get a big report, the PCE. It's the personal consumption expenditure. It's the Fed's favorite measure of inflation. Everybody expects it to be high. So really going into Friday, we really expect rates to actually move up on Friday. There's a better chance of that happening than rates going down. The third thing is recession. Now we know a recession's coming. We don't know when, but recessions are fairly predictable and they're cyclical. Our economy always has one. Nobody likes them, but they're going to happen. Well, the question is when. Some have really talked about recession at the end of 2022 going into 2023. We're starting to see some very minor indications that maybe a recession is coming. We're starting to see yield curves compress between shorter and long-term yields or rates. Those are starting to come more in line with each other. Now, we still have a long way to go to really consider this a recession, but again, that's happening. Now, recessions can be good and bad in a lot of ways. Recessions, we know, lower income or fewer jobs, but there were people in our industry, in real estate, when we had the last recession, that really thrived in the recession. And I think the important thing is to really be proactive. What can you do to prepare for that recession coming? Even though it may be a year or so away, what things can you do to be proactive so that you aren't stuck behind and trying to play catch up? So volatile week this week. We're cautiously floating, really watching the market, watching what the Fed members say about inflation and taper, and really floating into Friday and that PCE report. Again, there's a much better indication that we're going to see rates go up Friday than come down. So if you have any questions about your clients' rates and you need any input, please give me a call. All my information is down below. If you know somebody that could benefit from this video, please forward it to them. And if you have any comments, I'd love to hear it. Have a wonderful rest of your week, and we'll talk to you next week. Bye-bye.